morning, good morning. I think we're live. I think we're good. Cool. Sweet. All right. Let's look for some setups today, if we even do get one. I don't know. Let's see. All right, we got our news coming out in about 55 seconds. So let's see what we get here. As you can tell, we got our news coming out. Consumer sentiment. So we'll see what the consumers think about price. It's probably not going to be good. Things are fucking expensive. Last month, actual versus projected. Projected is way lower compared to the previous one. Look, they just keep going this down, higher, down, down. So it's getting lower and lower. I'm not too familiar with how those forecasts are presented, but this is what it is. Let's see, there we go. It's gonna rip up. It's pushing higher right now. Also lower than expected. Lower and lower. Look at the faith in the economy. Financial confidence is a leading indicator. 500 consumers, which asks respondents to rate the relative level of current and future economic conditions. People are just saying lower, lower, lower. The confidence keeps going lower, lower, lower. I actually did push higher this one. Saying previous was June. So it was lower. So lower, lower, higher, lower, lower, a little bit higher. It's not much difference than the previous month. Because if you have bad confidence with people, so if people don't have good confidence in the economy, they'll spend less. So if this drops and drops and drops, they're going to be spending less. So they're not going to go get the Starbucks. They're not going to go buy that extra food at the grocery store. They're not going to eat. They're not going to go out to eat. They're going to just make something at home cheap from what they get at the grocery store. So they're not going to be spending as much money, which in return stocks go down. Because they're not spending as much money and the economy isn't going to do as hot. So as long as this stays stable, we're okay. But if we go into a recession, then it's not going to be good. This will keep going lower. So the confidence number will keep going lower. Because what was it during COVID? I want to see. So it goes higher? There's no way I have this backwards. February 2020, 100. Maybe I got this backwards here. I'm not a data expert when it comes to this. I'd rather look at some charts. Actual greater than forecast is good for currency. So the confidence is higher. I don't care. There we go. We're done with that anyway. News already came out, so now we just look for a trade. So what we have here in the chart right now is we reached up to this 4-hour gap that's up within here. We closed bullish on the 4-hour, so new 4-hour candle open, but we could instantly reverse and go back lower. I know on the higher time frame we traded back down into this daily fair value gap, which is something we have to pay attention to. And we also have this gap down here. This could be a draw on liquidity if it wants to keep going lower. Because now price is playing this big range. From here to here. I know we gained a 50%. We're rejecting off of that, but we could possibly reach lower if it wants to keep going lower. But we'll see. Maybe we just consolidate this morning, which usually after a big range day, the morning is going to be like seek and destroy, consolidation, whatever. It's going to be harder to read. So my expectations going into today's market is lower just to begin with. So since we already moved higher this morning, so we had news come down, traded down lower, consolidated, ripped up at market open, and now we just had our news. We've reached this buy side, this fair value gap, 4-hour fair value gap. We've reached higher. Does it want to reach higher or no? Like, does it want to go any higher? It could. It could. So I want to pay attention to what we get in this area. But if we do get a distribution at this high, do we trade back down to these equal lows? To the news lows? Because we never hit the news lows. We haven't hit them on any of these indices yet. So here's the low on every single one. We have left that low there, but we hit the high on every single one. So there's liquidity down below there. So I want to pay attention to that. But I also don't want to be married just to one direction. But if we do shift lower here on YM, take out this low, and we stay higher here, we get a good accumulation in here. Maybe we can get a potential buy setup. It just depends on what it shows. But right now, I want to wait on more information to see if a short does present itself. Because now we got bearish SMT. We got a high here, lower high there, higher high over here. We inverted this 1 minute gap. We're just consolidating. Let's see what we get. Hey man, what's going on? Good morning. Remember that sell-off yesterday? That thing is huge. Big sell-off. I did some market review in my notes from yesterday. I added some more to my notes. We had a the higher high, the SMT's here, so making a higher high, lower high here. I just like was not bearish. The price obviously wanted to be bearish here. After this 5 minute closed here, this is like really go-to entry. I like started to look at it from like a higher time frame perspective. Yeah, yesterday, if you're talking about yesterday, I think everybody was bullish. Yeah, there's a lot of people that I follow that trade ICT. And like a lot of the people that like I look up to and like that I just look at how they trade, and I trade very similar to them. I looked at them and those people took losses. Like some of them took like 2 or 3 losses, some of them took just like 1 loss. Some of them had wins, but the ones that had wins don't necessarily trade how I like to trade. Yeah, a lot of people were bullish yesterday, and like, I was too. I just didn't see my A+ setup. So, but based on what price was doing, after this strong bearish closure happened on the 2-minute time frame, happened on the 1 minute, happened on the 5-minute time frame, price should not reach back up above this high here after this bearish candle closed. So this high should stay intact because we had the higher high over here, lower high here. This is the point of where price should not reach back up above if we're going to continue bearish. And like at that point in time, when that candle closed right here, I wasn't focused on the sells, but if I had a bearish bias, right there would be my entry when this candle closed and retested this order block here. So that would have been a good trade. Because as you can tell, we closed there. We have this. And that's what I noticed in my review. And like, what could I have done better? Could have focused more on the higher time frame, the SMTs we were getting, and not just being so one-sided, you know. But I believe at the time I was looking for that 3-minute to invert here, this gap to close, to go long, and we never got that. We just decided to go lower. But at the end of the day, I'm very happy with my performance and just staying out, because a lot of the people, like I said, followed and they lost. And I'd rather just sit out and understand what I'm looking for than lose. So yeah, yesterday's a great day. Looking for another good day. But I have to realize today might be a better afternoon session because of this large range expansion yesterday. So that might be better tomorrow. Okay. Not tomorrow. Afternoon. Today's Friday. So maybe we get a consolidation in here. Some type of equal lows created of some sort. Distribution, inversion, target the equal lows. Or come down here, make more equal lows, take this high, make more equal lows, high again, and then revert it, equal lows down here. Something. Something that would give a good quality short. That would be ideal. That would definitely be ideal. So we'll see what happens. Patience pays. I'll be back. Still pushing higher. Let's see how this thing goes. Let's look at crypto right now. The market's been selling off. But look at how we're making a low, another lower low. We don't have SMTs yet with Ethereum and Bitcoin. But if we do get that reversal here, if we do get more SMTs in this for value gap here on Ethereum, or if we do trade lower here on Bitcoin, I want to watch to see, because we do have the equal highs that are still sitting up here. But at the same time, I want to watch how price reacts here on Bitcoin because of, look at this. NASDAQ is starting to look, it looks bullish on the weekly. We're just getting a pullback. But if we still stay bearish here, we have lower high here, higher highs up here. So bearish SMT of the 3 indices. So we'd want to see a nice comeback, a nice reversal for price to continue higher. Or if we start to sell off, that could be bearish in crypto as well. So we want to pay attention to that. We want to see how those react together. Because we're starting to get more bearish signs of NASDAQ compared to with Bitcoin. So we'll see. But at the same time, we have the news highs from yesterday. We never hit CPI highs from yesterday. I was looking. That's part of the reason why I was bullish yesterday. The same with everybody else that kind of trades ICT. So we left those highs, and usually within like 1 to 2 weeks, those highs get hit at some point. So I want to pay attention to that high, and I want to see what happens here in price action. And usually after a fast sell-off, we'll see some type of pullback. So like big retracement pullback, and then another swing low or something before we get that reversal back up. So maybe in a week or two, we'll get in up to this high again. Depends. We'll see what happens in price action. Because if you look here, pulls back, consolidates, pulls down again. So it pulls back, consolidates, pulls, and then pulls up again. Like eventually. See how it took a while? Let's look at a previous pullback. This one actually reversed like pretty quickly. Pulled back, came up, then came down again. Bigger time frame. Shifted structure, retested order block, went higher. Very clear there. That was a good retracement. But like, look at this one. Pulls back, pulls up, and then it falls again. You see that? But we could get something like this where it pulls back, comes back in the range, pulls back down, and then back up. Maybe it rips up again, but we'll see. It all rhymes. It all rhymes. It's never going to be exact, but it rhymes. So what we can keep in mind when we look at price action. So we keep everything in mind. Like this could just be a retest to pull back down into here, or just consolidate. Or we could push up into here, do something like this, and then like this. So just got to keep in mind, what does price tell us at the times we like to trade? Like what does it look like on the 1 hour? What's it look like on the 15 minute, on the 5 minute? Like what are we getting in price action narrative that lines up with where we already are on the higher time frame? What I'd like to see this morning, I would have liked to see this already like trade down, create SMT, take this low, and then we get a reverse setup to take out this high. I would have liked to take a buy down here, but we didn't get that yet. So now I just wait. We took out this liquidity. The question is, do we just chop now? You know, it's possible. After a large range, that's what can happen. Let's see here. We had a pretty large range on Thursday. You go into Friday. Market open. So 10 o'clock, we took the low. And look how we went from the low up to this high. There's trades within there. Liquidity, liquidity, liquidity. Buys back up, internal high. Continues to chop around the rest of the day. So there's literally like one little buy you could take into here. Targeting this high. We never met up there. We just consolidated after we took out this internal high. So it was a small range. This is a very tight range the entire day. Small compared to this big range we had this day. I mean, 158 points is still a lot of points. But from this entire range, like right there, like 385, that's small compared to that. So you don't really get a huge range market. So like you only, for me personally, I only need like 20 points to be profitable. I only need to take 20 points. That's all I'm really looking for every day. And then obviously more. I want to catch 20 points. I want to take profit at 40 points. And I want to let one go to the next swing high. If I have 3 contracts on. If I have 2 contracts on my other accounts, my funded accounts, I'm looking for take 1 contract off at 20 points. So if you're trading a mini, no, you're trading a micro, it's only like 40 bucks. Then you take your next contract off at 30 points or higher. If you're taking it off at 40 points, like you're making like 120, trading like micros, which is like stupid because like on the funded accounts, the top step It's like you can only trade two micros on like the regular Top Step funded. The Top Step X you can trade more, which is like weird, but I mean it keeps risk management in place, I guess. Because if you're just trading one contract and you're doing a $400 risk on one contract, if you lose, what is it, like you lose 5 trades, which like can happen. You blow the entire funded account, which is just stupid to me. So like I don't understand why they don't increase the leverage on the micros for the regular account. I'm sure there's a reason behind it, but I don't know. Probably just business side of it. That's a one flaw with the funded accounts, I'd say. With them. Yeah, because here's the my funded futures one. We're sitting at about 53% of the profit target, so 4,800. We're looking for 9,000. And yesterday, no trades. Day before, a good win. Day before, a loss. So we're chilling. We're doing pretty good. June was pretty good. June was a good month. July's been a good month, I'd say, so far. Just take it slow. There's no rush. Plan on trading forever. There's no rush. Just look for A+ setups. Like if you got issues too, like the mental game, like everybody does, then it's like really focus on improving that mental game like every day. Like if you traded yesterday, what emotions popped up? Even if you didn't take a trade, still, what emotions popped up? What can you do better with those emotions? You know, I wrote stuff down yesterday. I wrote down I was like wrong on bias. What was I good at? Patience was great. Being content with not taking a trade was great. I also wrote down today I was like wrong on the bias, and that's okay. I mean, what could I have done better technical wise? Maybe going to the higher time frame. Looking at the SMT divergences, being okay with looking for a short if price failed to go higher on one of the moves. I mean, I'm not going to say coulda, shoulda, woulda, because that's all hindsight. So at the end of the day, I'm just going to be content with like what I did. And I can just look for areas of improvement to go forward. Because if I keep shitting on myself, saying I coulda, shoulda, woulda done this, the confidence is going to continue to go down. And that's not what we want. We want our confidence to stay stable and just get better over time. And if we keep shitting on ourselves for missing certain moves, then our confidence is going to be lower for when there actually is a good quality setup. I hope everybody understands that. It's very important. Psychology is huge, and no one talks about it enough. I mean, you look at all these like big trading influencers, especially people that are not ICT and they trade like regular like retail, supply and demand, support and resistance, all that shit. They don't talk about working out your mental side of trading. They just say be confident, be patient, be focused. But like, how the fuck do you get that? Like, it just doesn't just happen saying, oh, I'm focused, I'm confident. Like, it does not happen like that. Like, there's a whole process you have to go through. Like, I've done that shit. Trust me. I've looked in the mirror, closed my eyes, I've meditated on it all. That shit don't work. You actually got to figure out the problem. You can't just say I'm focused, I'm confident, I'm focused. No. You gotta figure out what is the problem, okay? And then you have to figure out why is that problem, like, why does it make sense you have that problem? And then you gotta say, why is that problem bullshit? You know what I mean? And then add a correction to it. So when you feel the problem coming on, you'll know your triggers. Like my trigger used to be, oh, we close down below this, we invert this. Oh my God, I'm gonna FOMO into it. So a closing of a candle used to trigger FOMO of missing the move. That don't happen no more because I figured it out. I worked through it. I spent my time working it out and figuring that out. Like if we just got a sharp move down here, that used to cause me FOMO. Oh, I'm gonna miss the move, so I want to just take this little bit of money, this 20 points there. Even though that's not a good, even though that's like how much I'm looking to make, it's still not a good setup. So I'd rather put more power on my good setup. Yeah, market's kind of slow right now. If you guys got any more questions or anything, just drop them in the chat. So what price is doing, we had a 15-minute closure that was pretty bullish. We're trading down into this fair value gap now. So lower low here, higher low up here. So I'm just observing what price is doing and what it's telling me right now. We're coming into about equilibrium of this entire range here. So from the high to the low, about in equilibrium. So I'm paying attention to that. I'm also looking over here on NASDAQ. We're in this fair value gap that we have marked up here. 4-hour time frame, we're in this gap as well. Equilibrium on NASDAQ from the high low would be up here. 20,659.50. So that's what we're looking at. But on ES, we're coming into the premium. On YM, we're pushing higher. We have a swing high up here. I'm going to put an alert up there in case we do get up there. We also have bullish SMT, so bullish, bullish. So if you're looking at the SMT that I just mentioned, we have a higher low, a lower low. So I'll look for price to just like hang out in this area for now, honestly. Because like I said, we still have all the news lows down here we never hit. So he's rejected out that 5-minute fair value gap there. We have this high up here. Higher high there. We're in a fair value gap here. Traded down into this discount. A bullish SMT. We got an order block here. We just changed direction. I want to see if this order block is going to support price and move it higher. Because obviously it's going bullish right now. Let's see if this order block and this fair value gap respect price. Because if you look, we rejected a 5-minute fair value gap. We're already bullish. We got a swing high right here. We came into a discount of that little range. I want to watch and see if this order block, these down close candles, support price to move higher. We got equal highs here. So we just dipped into this fair value gap here, just like that. We got this high up there, like I said. I'm just going to watch and observe this. This is not necessarily my trading plan. I like trading inversion gaps without the swing high being taken. So this is something I'm going to allow myself to miss out on. Okay. But from what I see in this price action, got liquidity up here. Yeah, liquidity up here. Let's say 20 point, like 20 point risk, 20 point take profit. I would say like this is like an 8 out of 10. I'm convinced we're going to reach to this 20 points. As long as this high isn't hit yet. We got to watch this high here on ES. So look at how we're making all those equal highs there, and we're staying lower here. So this has to blow right through this high for this trade to still be confident here. Look at that. If you don't think this is algorithm, I don't know what you're doing. Like, price doesn't, this isn't random. Like all these equal highs here. Like that's not random. You know, that's all algorithmic. Same with these equal lows here. I wouldn't be surprised if we dipped into these equal lows. And something I stopped doing too was like, I stopped paper trading as much because when you place a paper trade, you still get that dopamine hit if you're right or when you're wrong, even though it's like, I don't really care. But it's not building up your habit of tape reading price and being okay with missing the move. I think being okay with missing a move, just because I think it's going to go higher and it is higher probability of moving higher right now because we haven't hit this high yet. The probability goes like basically cut in half if this hits the high and it rejects and this stays lower. Like that probability goes like right down. But what I'm saying is like paper trading, you still get that dopamine hit and you're not building good habits with that. Whereas like I'm at the point of my trading where I'm looking to continuously build up, waiting on a quality setup that's to my trading plan. Like if this had equal highs up here, like this, we had a nice pullback into here, something like this, more equal highs in here, something like this, maybe another one with a nice shift to structure, retest with an inversion, took out another low maybe, multiple lows, because like we only took out this low, well, this low and this low, not even this low. This low is still intact. If we did that and we had SMT where like this came down and we made like a low and then this and then like a higher low here, but we made a lower low here. If that was the case, I would take that. That's A+ quality setup all day long. We don't have that right now. So what, even though I would say this is higher probability to go here, why would I want to like risk that when I can just wait for a better time macro, which is 1050 to 1110, and then see what price is doing around that time. Plus, we also just took higher time frame liquidity, and we're at the target. If we were to go long today, if price came down first, I would have targeted up here and taken off like all the position. I wouldn't even be holding it anymore. Because I guarantee you, the bank buyers in the news down here that had all the money is scaling off their positions up here. Okay, now, if I was in this trade, I would move my stops minimum. Right here, minimum. But I'm also not even in the trade. If you want to break even in the trade, make it risk-free. Cool. Or put stops down below this swing low that just took out this liquidity. So you're only risking like 6 points now instead of the 20. Because like this is where price traded down into. Or just move it to break even. This is all hypothetical. I'm just saying like this is trade management 101. When liquidity's taken, you reduce your risk. This 30-second inversion was a better setup right here, anyway. But we didn't have the SMT between these two. Like on the wicks. I like to see him down here in the wicks too, but we didn't see that. There we go. There's the 20 points there. Then you'd be looking to take another contract off here at the high, 36 points. And then you could let the last one go. Like all hypothetical, this is like a good Good little setup. You can let the last one go to like the -2 standard deviation or whatever, which would be here. So that'd be 54 points. So like, let's say this was a trade you took. So it'd be 400 plus 4, 8. I'm trying to think here. It'd be 800 minus 2, 6. So it'd be about 700 on the next contract. So then you'd have, let's see, in the following contract, do 4, 8. It'd be another 1100 minimum. To this TP, with this entry that I had, like let's say this entry was right where I had that order block. 3 contracts just from this little move. 2,200 bucks. That's crazy. And when ES took that high, like notice how I said like reducing the risk instead of break evening the trade. It's because the trade has a probability of still playing out. So it's best just to like reduce the risk in case it does want to come back down and you're not taking the full stop loss. It's not fear, it's just reducing the risk because of something that your trading plan said to do. So right now, locked in would be 1100. And if we hit this other target, that'd be like another 1100. Just about. If you look at all 3 of these, there could be some SMT down here in the wicks. There might be. Let's see, we had this as the low, 23. Yeah, this one made the next low. That made the next low. Yeah. Wait, that was with YM. But we've already taken the liquidity, so it's kind of hard to like want to fuck with that. I mean, it still looked pretty decent, to be honest. Because we did have, look at this here. We have this low here. Where's the low? We have this low. 1004. So we had a lower low here. And then we had a higher low over here. 1004. Where is it? So we had a higher low there. With a 1004. So we had that SMT divergence and we took internal liquidity. Then we shifted structure with displacement. Take this off here. We shifted structure with displacement. Fair value gap here and a 5-minute fair value gap. Remember? I'm going to type up 5-minute FVG. This is going to my notes. Then we had the fair value gap paired with an order block paired with this fair value gap for entry. There we go. Hypothetically, if we took that trade, take profit, it'd be hit just now. That one trade right there, if that was like clear as day to your trading plan, that one trade right there can really, like I just said, 2,200 bucks. You're scaling out along the way. That one trade. I mean, you do that once a week. That's 8,800 bucks a month. Just that. And notice how I'm not having like any FOMO with this, because like I had an overall narrative on price. Yes, we could have reached higher, but the higher time frame narrative wasn't necessarily telling me to get in yet. It's obviously reaching higher, you know, it's working it. Guarantee you there's a lot of like ICT traders that took that too. That was pretty solid. There you go down to the 30-second. You see that? Sheesh. There you go. Thing's on fire right now. Holy shit. Yeah, with the SMT in the 15-minute, like I was mentioning earlier. Close that 4-hour. The next one started expanding. See if we get this 15-minute closure here. If we close up above this gap, which we might, it'd be a 15-minute inversion. It's possible it could pull back down and retest here, get another long setup. Like come back down into this range, consolidate, equal highs here, Retest this for value gap. Another setup just like that, but over here. What if I can copy and paste it? Let's see. Something just like that. See what I mean? Something just like that, where it just pokes up, pulls back down into the 5-minute gap, and then trades back higher into equilibrium. These highs up here. It's possible. Got these gaps there. So the gap here. Holy shit. Honestly, with this expansion already, this is, I don't know if we're going to be able to get another setup later, like this morning. Afternoons is probably going to be better again. Yesterday afternoon I couldn't trade, but you can see how we traded back down, another lower low. Shifted. There's still not really much good price action yesterday afternoon either. This is still kind of garbage. Yeah, this is one of those mornings where it keeps expanding. It looks like that's what it's gonna do today. Is dollar bearish? Oh shit, it is. So dollar is still working its way lower to these equal lows down here. We're likely gonna hit that. So if we hit that, we're going to keep expanding here on the indices, which is good. I mean, that's good for, like, the stocks and the economy. Yeah, it's Friday. We might get another move later in the afternoon. We got the macro starting here soon. We got 3 minutes, but we already expanded. So I don't know. We had this macro here from Was it 950 to 1010? Not really much occurred for entry within that macro. But then we had a 1020 to 1040, which is like another macro right there. And look what's set up within that macro. So there's nothing within this one. So this one here had nothing clear. This one here had a nice shift of structure for value gap. 30-second inversion level. I wasn't on 30-second. I wasn't trading 30-second. But I did notice this retest. I was waiting for more information in case we did get that. Sell off again and then a buy back up. Shifted up higher. Up to here. So within that macro, from like entry area, like right here, it's gone close to 100 points already. That's pretty fat. 100 points in 4 contracts. That'd be 5 times 1 contract. So that'd be 400 times 3. So 3 contracts times 5. 100 point move, but 3 contracts full would be 6 grand. I'm not looking at it like that. I mean, I wouldn't have held all the way up to there. I was taking profit. I would definitely be taking profit up here. If I was looking at that, that was like a better setup. Yeah, I think the move's done for this morning, to be honest. So I'd be looking for something else like later this afternoon. If I can get on the charts, I'll look for another trade. I'm probably not going to live stream, but I'm going to look for something a little bit better. But yeah, on this macro, so we just started the new macro, 1050 to 1110. I see from here to here. Let's see if we get a pullback into this range here. If we get a pullback down into here and give us something like I was saying earlier, I'd want to be looking for this 50% of the overall range. So we'll see what we get there. But at the same time, we just hit this higher time frame fair value gap here. So if I make these, if I make that liquidity equal there, I'd want to see what happens in this area now. Do we distribute and then start to pull back into this range with a short setup? Or what do we get? You know what I mean? There's 50%. I'm just going to mark up 50% here. I'm gonna take all this shit off my screen. 4-hour gap. That's another gap there. Wait a second. That's a 15-minute. That 15 minutes important. This 15-minute inversion. Because if price does like send up from here, that's interesting. You're already in the standard deviation from the news too. It's also good not to like micro pick some bullshit setups either. When we're already expanding and you already like missed the move and there's like not really high quality setup, then you trying to catch the move up here is fucking stupid. Well, I'm gonna have to get going now. All right. Well, have a good Friday. Have a good weekend. Just look out for some trades later this afternoon if something does present, if it's good. But yeah, take it easy, guys. Love y'all. Not financial advice.